Hello everyone, welcome to QuantSap. Myself Vignesh. Thanks for your valuable time. Thanks for joining me in this video yet again. Okay, so today we will be talking about, as you might have seen in the thumbnail, today's topic is about option writing. Okay, so before getting into this video, those who are new to QuantSap, so I would ask you to kindly download this application if you haven't downloaded yet, because as soon as you download this application, you will be getting access to approximately 25 free tools. Okay, apart from these free tools, I would say QuantSap has approximately 70 to 80 tools. Okay, out of which 25 tools are free. You can definitely go and explore them, and if you want to know more about the paid version, like how paid tools can help you to improvise your trading, what you can do is the link for video library is given in the description. You can visit the video library and you can check. However, if you have installed the application, kindly go to learn. Under self learning, click video library. Okay, so what is video library? Video library consists of almost all the tools which QuantSap has, and that too in multiple languages, I would say. So just click on languages: English, Hindi, Marathi and Tamil. So these are the languages which we have covered. So you can choose the language as per your convenience and you can explore all the tools. The video library comprises of free tools as well as paid tools. So kindly go and check them. Okay, so this is free of cost for all the users, like a free user or a paid user. Anyone can go and check out all the videos. So it will give you an insight like how the paid tools work, how you can use them, how it will be useful for your trading journey. Okay, so let's get into today's topic. Let's talk about option writing, and is there any tool which will help me to optimize the option writing? Okay, so usually what an option writer, who is an option writer, and what usually an option writer looks for in the market. Okay, give me a second. Okay, so what an option writer expects, say an option writer usually expects the market to stay range bound, correct? An option writer doesn't like momentum, because what he wants is he simply goes and writes call over here, he simply goes and writes put over here, correct? So call writing and put writing, and he expects the market to stay sideways or say range bound. Now what usually happens is sometimes there is a possibility that stock can take direction on either side. So accordingly they will go and hedge their position. That is one such aspect. Now how to filter the stocks? Say for example, if you're writing it in Nifty, that is fine, but if you are stock specific, so how to go and filter the stocks wherein I can do option writing, correct? So give me a second. So one concept which is very much closely associated with option writing is implied volatility. Okay, IB. Give me a second. IB, that is implied volatility. Okay, so let's talk about implied volatility. Okay, so say implied volatility is usually sticky to the ground level. Whenever it moves up, it is bound to retrace. Okay, IB will never sustain at higher ends. Okay, so IB will move this way, and say IB has dropped down, immediately it will revert to the mean. Okay, so say for example, this is a mean level. If IB moves up, it is bound to retrace. If IB drops down, it is again bound to revert back. So IB is always sticky at one particular level. You can say IB is never trending. Okay, so this is one of the characteristic of IB which I would say. Apart from this, if you see IB and premium, that is option premium, are directly proportional. Okay, IB and premium are directly proportional. Now say for example, if IB moves up, even the option premium is bound to move up. If IB drops down, even the option premium will drop down. Okay, so whenever say you are planning for an option writing, or if you are planning to choose a stock for option writing, it is always advisable that you write options when the stock is in a highly volatile environment. Because see what we saw, whenever IV spikes up, IV immediately drops down, correct? IV will never, see, say for example IV is moving, IV shot up and IV is staying sideways and then IV drops down. This will never happen. Okay, IV will never sustain at higher end. That is a characteristic of IV. So if IV has shot up, then definitely, as we saw, the premium will also shoot up, because IV and premium are directly proportional, correct? So when IV has shot up, IV has to come down. So when IV will come down, definitely the premium will also come down. So in that case, option writers will be beneficial, correct? Because if they write the option, the value of the premium, the value of the option will drop down and accordingly they will make money, correct? So usually what we prefer is, whenever the stock is in a highly volatile environment, it will be always beneficial to go and choose that stock for option writing. Okay, give me a second. Okay, so let's get into the QuantSap application. And one more thing, say for example, a particular stock's IV is, say IV or say anything. What is IV? Basically the market expectation, we can say. Okay, IV is market expectation, that is say 15% volatility. If IV is 15%, that means market is expecting 15% momentum. Okay, over a period, okay, not on a one single day, but we can expect 15% on the upside or 15% on the downside. Suppose if the expiry is say 2 or 3 days left for the expiry, then accordingly you can calculate IV for one particular day. Okay, there is a formula which you can apply and you can calculate. We won't go in depth. Okay, so say for example IV is 15 and say there is one more concept called FRV, that is future realized volatility. Now say for example IV is 15 and say the post like FRV, say it is 20. Now when you do IV minus FRV, okay, say IV is 15 and market is expecting 15% volatility and say the actual volatility was 20%. Now what does that mean? That market has expected only this much move, but this much move came. Okay, in that point in time, if IV minus FRV, okay, if IV minus FRV, say it comes negative, okay, that means IV is more as compared to FRV. That means more momentum in FRV. Like if the market has expected 15%, the movement, the IV was somewhere around, you can say below 15, then you can say option writers won, because they expected the range and the market stayed in that range. Whereas if IV minus FRV, if you say it is negative, okay, if IV minus FRV, say for example, let us explain here. Okay, say IV, give me a second. Okay, IV minus FRV. Okay, say for example market's expectation is 15% and say the future realized volatility is 20. Okay, then what is the resultant figure? It is -5. That means market expected 15 but the actual volatility was 20. In that point in time, option writers will lose money. Correct? Option writers will lose money. Now say market is expecting 15% but the actual future realized volatility is just 10. Okay, so market didn't move that much. Okay, so it will be +5. In this case, option writers won, we can say. Okay, so this is FRV is like simply what the market is expecting and what actually happened. Okay, so here if you see, go to search and just let me show you how this IV and FRV works. Okay, see here there is an option of IV minus FRV. Let's go to this. Now if you see, check how this happened. Now see, if IV minus FRV, okay, so all the green bars are indicating that option writers won. Like if they are expecting 15%, the future realized volatility is less than 15%. If the IV is 15 and the future realized volatility is less than 15, then in that scenario you can say option writers won. Okay, so you cannot actually create any trading setup using this, but this is one such good concept which you can definitely go and explore. Now if IV minus FRV is say negative, that is FRV is more as compared to IV, then see here you can see the red bars. That means in these scenarios you can say the future realized volatility was more as expected, like IV was expectation was somewhere around 15 and the actual future realized was 20. Then in that case you can say the option writers lost. Correct? Now let us go and check out how to filter out the stocks. Say okay, so let me go to search and say we have a tool called Vol Trader. Just click on search and type Vol Trader. Now if you see here, you will be getting long volatility and say short volatility. Can you see here there is short volatility, here there is long volatility. So you will be getting long volatility and short volatility signals. Now what does this mean? Okay, if long volatility is there, that means it is indicating that volatility is low and we can expect the price. So we can expect a upside on in volatility, not in the underlying. Okay, if there is long volatility signal, that means volatility is very low and we can expect the volatility to go up. Okay, if volatility goes up, as we know, the premium will go up. Okay, so I have posted a separate video on this. You can definitely go and check. Now what is short volatility? See, short volatility signal says IV has already shot up and there is a probability that IV might drop down, and when IV drops down, as we saw, the premium will also drop down. So these are kind of stocks wherein you can definitely go and plan for option writing. Correct? Because if the IV drops down, there is a possibility that the premium will also drop down and option writers might benefit. So this is one such tool wherein you can use and filter out the stocks. Okay, so this was one such tool. Now apart from this, there is one more thing, like go to search and type Vol Grid. Okay, so Vol Grid, what is Vol Grid? Here you can see, let me click on sort by IVP. Okay, so here it will show me all the stocks where the IV percentile and IV rank. Now what is IV percentile and what is IV rank? Say for example, here I can see IVP is 93 in Titan. Okay, so if IV percentile is 93, that means I can conclude that only 7% of the days the IV was more than the current IV. Say current IV is 27 in Titan. So historically, if I go and see the look back period, the look back period is 250. Okay, so historically, if I go and check, only 7% of the days IV was trading more than 27. Okay, current IV is 27. So more than 27, IV traded only 7% of the days. So you can conclude that in Titan, as of now, volatility is more. So this is a good candidate which you can go and plan for an option writing, or say a neutral strategy. Okay, so kind of selling strategies you can plan in Titan. Okay, so like whenever we usually say IVP is more than 90, 95 or somewhere around 99, that means IV is extremely high and we can the stock is in a rising volatility environment. Accordingly, you can go and plan for a short trade over there. Not exactly a short trade. We are not bearish on the stock. We are bearish on IV. We are expecting the IV to drop down. Okay, so let me be clear about it. Okay, so this is one such tool from where you can filter out the stocks. Okay, now how to do option writing? Usually what writers do? Usually what option writers do? Okay, say open interest. Based on open interest, this is the resistance and this is the support. Usually what writers do? They will go and write call. They will go and write put over here, and they will expect the market to stay sideways. If they are expecting any huge momentum, they will hedge at this level. They will hedge at the higher level. Correct? But they usually what they consider is, they usually consider say a little bit of volatility we do consider, and then we usually consider the open interest. Based on the highest call writers and highest put writers, we usually create a sell setup. Correct? But instead of doing it manually, okay, what I would suggest is go to trading, go to quant model and see there is option writer. Okay. So what this option writer does is, it will consider each and every parameter. If you see IVR, IVP, theta speed, gamma risk, trend score. So it will consider all the aspects. Say what is IVR and IVP. Just now we saw what is IVP. What is IVR is basically, say for example, the current IV is 45. Okay. And the highest volatility in the past 1 year was 60 and the lowest volatility in the past 1 year was say 30. Okay, so as of now, based on the comparing the highest and the lowest, highest was 60, lowest was 30 and currently I am standing at 45. That means IV rank is 50%. So I am standing in the middle. Okay, so this doesn't consider the percentage of days as such where the IV traded, but IV percentile emphasizes more on the percentage of days. Okay, so it would be better if you consider IVP over and above IVR, but it's subjective. Some people look at IVR, some people look at IVP. So this option writer tool considers both IVR, IVP as well. Okay, so based on volatility and based on theta speed, like say for example, if you are near to the expiry, the theta speed, like for option writer, and if you are near to the expiry, theta will be your friend, I would say. Even if you are far by expiry, theta is still option writer's friend. If the stock says sideways, then obviously what an option writer seeks for, he wants the stock to stay sideways and he expects to benefit out of the theta decay, correct? So it will consider the theta speed as well, like how fast the theta is gonna decay, and gamma risk. Okay, so gamma risk I would say is you can say an enemy to the option writer, because if there is a direction and if gamma explodes, ultimately it will impact delta, and ultimately what will happen, delta will drive the premium, correct? So this is one such thing which is you can say a threat to the option writer. Okay, so now here if you see lucrative, moderate and risky, there are 3 signals mentioned. So what is lucrative, what is moderate and what is risky? Now if the overall signal, okay, overall signal you can say is green, is lucrative. Okay, if it is green, it is lucrative, that means you are good to go with it. If the overall signal is yellow, that means it is moderate, it is slightly risky. If it is risky, then it is risky, correct? So let me explain you the interface first. Now see, on the left hand side, search option is there. So you can go and check out any stock wherein you are planning an option writing. Just now we saw Titan. There was a signal of short volatility. So say I want to I want to sell option, I want to do option writing in Titan. So I can go and check Titan over there. Now if you see, there is expiry date. So whichever expiry you are willing to trade. Suppose you are trading stock specific, then definitely there is no option, but you are bound to trade the monthly expiry. Now here, number of days that are remaining for the expiry. Now say for Nifty, 8th August is the expiry, so there are 7 days left. So you can accordingly set the bar, like for how many days you are willing to hold your position. Okay, and then comes the range indicator. Okay, let me explain you about this. Now see, what is this range indicator? Now there are n number of options given over here. So first is Bollinger. Now what is Bollinger? Usually you see the Bollinger Band. So based on the Bollinger Band's range, it will give you it will forecast the range. Then comes Z-score. What is Z-score? Z-score is derived based on standard deviation. Like say, for example, a mean of a stock is say 50 rupees. So how far it deviates from its mean on the either side, like say it deviates 2% on the upside, it deviates 1.5% on the downside. So based on the standard deviation, it will give you a range. Then comes straddle range. Okay, what is straddle range? Say for example, if you are selling ATM, say if you are executing a ATM sell, okay, selling call and put, then based on the premium, like how much premium you are getting for selling the ATM options, based on that it will give you a range. Okay, and then IV range. Okay, so just now I told you about IV. Okay, so based on implied volatility, say implied volatility is 15%. So based on implied volatility, it will give you a range. Then comes the highest OI call out put. That is the plain vanilla flavor, this thing which usually people do, looking at the highest call, looking at the highest put, and then executing a sell strategy, correct? So, but I would recommend you to keep it as QuantSAP indicator, because this is, I would say, a bit advanced. This comprises of everything. Okay, instead of relying on one such thing, it is better if you choose QuantSAP indicator, so we won't change any default setting. Okay, say for example, let's go and check out Titan now. Okay, So let me plot Titan over there. I am randomly selecting any stock. You can go and filter out the stocks and you can select it as per your convenience. Let's say I have selected Titan over here. So the days to expiry is 28. Let's say I want to hold it for next 15 days. I am willing to hold this 15 or say 16 days. I am willing to hold a sell in Titan. Okay, give me a second. So let's say I want to hold it for 12 days or say 15 days or 16 days. Now if you see, check here the overall signal you can see. Okay, as of now it is indicating me yellow if I willing to hold it for 22 days. That means yellow is slightly, you can say, risky. Okay, so I won't go and execute it. So whenever it is yellow, if you see, the risk reward is not matching. That is the reason why it is giving me a moderate signal. Okay, so if the risk reward is say 1:1 or more than 1:1, okay, more then it will usually give you green signal. Now let's go and check out. So as of now in Titan, it is not indicating me any green signal, so I won't execute any sort of trade. Okay, let's go and check out Nifty. Let's say, let me check 8th August is the expiry. Okay, so today is 1st August. Okay, let's go and check out 8th August expiry. That is the immediate next expiry, and say I am willing to hold it for 5 days. Okay, so see here it is green. Can you see? So here it is giving me a green signal. Now based on this, it has automatically given you a range, if you can see. Okay, so it has automatically given you a range. See, your range and analytical range will always be same unless you don't adjust this range by your own. So this will always be same. Okay, so based on this range, it is asking you to execute a strangle, that is selling 26,300 call and selling 23,900 put. Okay, now if I do it for 2 days, now see the risk reward is not matching, so it is giving me a red signal. Okay, so like this you can go and check out any stock, like whichever you are willing to trade, and say let us go and check out one more stock. Let's say State Bank of India. Okay, so it will be clear. Say the expiry is 29th August. Okay, I am willing to hold it for say 17 days randomly, and now I can see the signal is green, so it is good to go. Now say it is asking me to sell 1000 call. Okay, at 1000 strike I am supposed to sell a call, and at 770 strike I am supposed to sell a put. So based on this, I will be, see the target profit is 2906, the stop loss is 2664. Now if you just click on this execute, okay, see the profit alert is set at 2325, stop loss alert 2664. Now if you see, you will get a notification on mobile or Telegram app if you have connected this. Okay, so as soon as this alert triggers, you can go and square off your position. You can also manually change this, but what the system has given, it is fine. But if you want, you can accordingly go and tweak it as per your convenience. Now what does this mean? Trail profit after 1453. So here also you can change it. Now as soon as 1453 reflects on your screen, the system will start tracking your profit. Okay, it will give you an alert that your trailing profit level has triggered, and it will start tracking your profit. Now trail profit to 80% of max MTM. Say for example, your profit has touched 1500, and from there if it drops 20%, say from 1500 if it comes to 1200, it will again give you a notification, because you have said that trail profit to 80% of max MTM. Okay, so as soon as it drops 20%, it will give you an alert, and if you are willing to square off, you can definitely go and square off. Okay, accordingly if you see, analyze over here, see, say for example, if you have executed this position, say on 6th of August at 3:30 PM, State Bank of India is closing at this level, then this will be your profit or loss. If 805, this will be the position. So accordingly, you can go and check out your position at each and every date at whatever time you want. Like say on 9th August, if these are the levels, then this will be the situation. So likewise, you can go and check this. Okay, apart from that, if you want, see, go to selector option over here. Okay, go to selector. See, now what is this selector? Now check the trend on the last column trend. Now what does this mean? It is giving you the trend, like say for Bank Nifty, the trend is oscillating as of now. For Aarti Industries, I can see the trend is mild. So usually you are supposed to select those stocks where the trend is oscillating. Okay, so usually for an option writer, he doesn't like trend is never the friend of an option writer, correct? So you are supposed to go and check oscillating stocks, and you can definitely take that oscillating stocks, you can plot it over here. If the signal is green, you can go and execute it. Okay, and accordingly we also saw how to use Volgrid and Voltrader for filtering out the stocks for option writing. Okay, so I hope you might have definitely enjoyed this video. Like this video, share, subscribe and comment, and let us know how you felt about this video, so that it will be even helpful for us when we bring some new concepts. Okay, so that's it for the day. Stay tuned, we'll see you soon in the next video. Thank you everyone.